In this video, we are going to be backtesting gold over the 2025 price action. Before we do that, quick recap. These are the results that we recently had when we backtested gold over the 2024 price action here on the channel. We had a total of a 66% win rate over the course of an entire year worth of data with 107 total trades taken, and we were using a mechanical 1 to 3 risk to reward system. So these were the results for the 2024 price action, but in today's video, we're going to be testing over the 2025 price action. For anybody that's new to the channel, I'm also going to be doing a quick rundown of the exact trading plan and system that we're going to be testing in this video as well, which will also be left as a completely free trading plan document in the description below as well. So plan for this video is we will first of all walk through that trading plan for anybody that's new to the channel, and then we will get into around 40 minutes or so worth of backtesting on gold on the 2025 price action. So let's not waste any more time. Let's head right over to the charts and let's get straight into it. Alright guys, so as mentioned, we'll do a quick walk down of the trading plan and strategy that we're going to be testing first of all. For anybody that's already seen this part, I will put the chapters at the bottom of the screen so you can skip through to the backtesting itself. And as I mentioned, this full trading plan document will be available completely for free in the description below as well for you guys to download, so that you have a nice concise trading plan to follow whilst you are on the charts. So getting right into things, step one, and as soon as we come over to the charts, the first and primary step that we're going to be taking is to identify higher time frame market structure, looking at the daily and 4-hour charts first of all. And all we're simply doing in this step one is to mark on the current structure, right? So is price printing higher highs and higher lows, or is it in a downtrend printing lower lows and lower highs? This is crucial because we are going to be looking to align ourselves with this trend direction and only take trades in line with this direction, right? So if price is bullish, we're looking to take buys. If price is bearish, we're looking to take sells, right? Fairly simple stuff. So after we have done that, we're then breaking this down to the 1 hour and lower time frames in order to identify any of the more refined structure. And what I mean by that is very simply, so if we have this uptrend in structure, right, it's very and we're on the daily time frame, it's very difficult to see any of the kind of intraday structure points, right? So this is when we're breaking it down to the hourly time frame so that we can see the more internal structure and also where price is likely heading towards going forward. And this is going to become a lot more concrete when we go to the actual backtesting part, but bear with me for a moment while we just explain kind of the concepts behind the strategy. One thing I will also do as well is when I come over to the charts, I'm drawing on previous areas where price has reacted from. Here I call them previous mitigations, as you guys can see. What I essentially mean by that is if price has come up, for example, and reacted from a supply zone, I'm looking to box this area off just so that I can more easily see where price has reacted to previously, and this kind of gives me a good indication when we come over to step two for where my points of interest are going to be and where we are actually going to look to buy or sell from, right? So going over to step two, that is exactly what we are going to be doing in step two, which is basically just to identify any areas where we are actually looking to buy or sell from. In my particular case, these areas are going to be areas of supply or demand within the current trend leg. So looking at this picture right here, we can see that price created a breaker structure, then retraced into an area of supply, reacted from it and pushed towards the trend lows. So what I'm looking for here is between the high and the low, I'm looking for price to pull back into an area of supply and then look to short from that area, right? And in order to make this a valid area of supply or demand, if we're looking for buys instead in an uptrend, I very simply need to see some imbalance being created from the area of supply. This tells me that this is an area where price created volume from, and therefore once price retraces back up into this level, it's also likely that price reacts from it again, right? Because people were willing to sell from this level in the past, so the kind of theory is that they will be also willing to sell from that level going forward in the future if price were to retrace up into it. I also need to see some liquidity created below the supply, right? I always tell the guys inside VIP that if liquidity has not been taken out, you probably are the liquidity, right? So if I'm looking at a higher time frame POI, I always need to see some liquidity being taken out. Like in this case right here, you can see we have this previous high that was swept into the area of supply before we get that reaction to the downside. And that's what I'm looking for with this particular strategy, right? So just a quick summary, 4 point of interest, we need to see an area of supply or demand aligning ourselves with the trend. So sells in a bearish market, buys in a bullish market. We need to see it create some imbalance, and we also need to see some liquidity being taken out into it. And that's all we're doing in step 2, right? Obviously in practice as well, when we come over to the charts, there are going to be examples where we have a few different points of interest where we're looking at, and that's where kind of step 3 comes into play, and this is kind of going to help us to validate which zone we should trade off. So step 3 is using lower time frames for confirmation, and all we're simply doing here, just to kind of preface this, is we obviously don't want to blindly buy or sell from the point of interest. We want to wait for price to show us whether it wants to respect this level or not. And in order to do this, what we're doing is we are going over to the M5 chart. Always the M5 chart at this point is very important. The thing that I've personally done with this strategy is I've made it as mechanical as possible, meaning that there are a few very strict and mechanical rules. Entry time frame being the M5 is one of these mechanical rules. I'm never looking at any other time frame to enter trades. I'm only looking at the M5. Once we're on the M5, we are waiting for price to basically realign with higher time frame structurally. So if price were to retrace into this area of supply, I'm then waiting for the M5 to present a change of character. By breaking the most recent higher low, I'm then looking to enter on a retracement into an area of imbalance. So just to summarize that, what I'm looking for is for price to come up into this area of supply. I'm looking for the M5 to structurally shift bearish by presenting a change of character. I then need to see an imbalance created, and I'm looking to enter on that imbalance. And it's as simple as that. Also, going over to step 4 now, this is also where one of my mechanical rules, and one of the things that has massively helped my trading, is using a mechanical risk to reward. So on every single trade, I am mechanically targeting a 1 to 3 risk to reward. And this is also not some random number I've plucked out of, the thin air. This is based on over 5 years worth of backtested and live tested data. This is the optimal risk to reward that I found over all of that data. So this is basically what I've come to the conclusion of after all of that testing and data collection. I'm not making my trades break even ever. I'm simply letting them run to stop loss or take profit. And again, this is based on the data. The data suggests that holding to stop loss or TP is more profitable than making break even. I tested numerous different break even rules, and holding to stop loss or take profit with a mechanical 1 to 3 risk to reward system was always the most profitable approach. So that is what we're going to be doing in terms of this backtesting session. And then the only other part you guys need to know for this is that we are doing 1% risk per trade. The risk is staying the same no matter how I feel. That's very important, because I see a lot of people making the mistake that if they're more confident in a trade, they'll risk more. If they're less confident, they'll risk less. But the thing with this is that the trades that you're more confident in may be the losers in a sample, and the trades that you are less confident in may be the winners in a sample, right? So the market really doesn't care about how you think or feel about the trades. So I stick to the same risk on every single trade. Always 1%, no break even and no partials, and 1 to 3 mechanical TP. I've also included a few more nuanced details about some of the key processes I use as well. But as I said, this trading plan will be for free in the description below for you guys to check out in your own time, because that's besides the point of this video. So that's the trading plan and strategy we're going to be testing. Obviously this is going to become a lot more concrete when we actually go over to the charts, so bear with me if it's a little bit confusing in the moment, or will become a lot clearer as we go over to the charts. So let's go ahead and do that now, guys. Let's head over to the charts and let's begin the backtesting session. All right, guys, so thanks for joining me here over on the charts. Let's get right into the actual backtesting and start from where we left off last time. Then we got to around the 25th of February. So over here on the charts, what we can see is that, first of all, zooming out to daily chart, right? We can very clearly see that price is overall still in this bullish trend. It's been parabolic from basically like the past, basically since the beginning of 2024, and now we're like a year later, price is still in this parabolic uptrend. So overall, I'm looking to buy, right? But if we look at where price is positioned here, you can see it's kind of made this impulsive move down and it's stopped just below sweeping any of these previous lows. So if we head over to the 4-hour chart, we can also see here on the 4-hour chart, we have price starting to break lower. We have it basically sweeping this high, then presenting a change of character just here. If we just mark that on, this is our change of character, right? Price created a higher high, swept the high, then broke lower, creating a change of character. If we go over to the 1-hour chart, this is where I'm looking for a point of interest, right? So what we can see here is that after this change of character, price has now created this kind of area of supply. just here, if we mark that on. So what I'm looking for at this point is for a price to basically retrace up into this supply, and then I'm looking to get an entry, as always, on the M5 chart. So once again, I just want to reiterate this. Price is overall still bullish, but what I'm doing here is I'm looking at where the liquidity is and where price is reacting from to the left to kind of gauge where it's going to go going forward, right? So I think at the very least, looking at daily time frame, we can see price maybe gravitate towards some of these previous lows right here. If we just mark on this as a liquidity level and save it as a template. There we go. So basically looking for price to gravitate towards one of these liquidity levels, right? We have this one, and then on the daily time frame, we also have this liquidity level right here. So let's have a look at if we can capitalize on some sales down into these levels. This is the first POI that I have marked. There we go. Price has retraced up into it. So hopping over to the M5 chart, if we just change the color of this so it's, so it's a bit clearer to see for you guys. So what I'm looking for here is, as I said in the introduction, we're looking for a 5-minute change of character, right? So at the moment, you can see price kind of just consolidating in this area. What we want to see is for price to clearly come up and create some structure and then break that structure to the downside. So let's just play price on and see if we get that. Yep, there we go. So this is perfect. So now you can see price consolidates after first tapping into this zone. We get a sweep of this high, and then price breaks lower and creates a change of character. This is one of the things that I like to emphasize to the guys inside VIP as well. And one of the things that gold will very frequently do is when price taps into your area of supply or demand, it will very often make this initial rejection, then sweep that first tap and then break lower, and then you will get your entry, right? In this case, obviously we could wait for a retracement into, you know, this area of supply. But I think in this case, the risk to reward is already going to be worth it. So what I'm going to actually do here is just enter by a market execution here. Stops a little bit above the high. And as mentioned, we're going to be testing a mechanical 1-to-3 risk to reward ratio per trade as well. So if we just set this limit right here, is this a 1-to-3? Slightly bigger stop on this one, but I'm fine with that because this is more of a swing trade back towards the lows. So if we set this trade, new order, limit order, and very nice feature here. Price is basically filled in all of the details for you, so you don't have to manually enter them all, and you can do that just by clicking on the risk to reward tool. So if we place the order here, sorry, that should have been market execution actually, but there we go. So we're tagged into this trade now. Let's see how it goes. Let's just play this on. Let's play it on higher time frame, so it's a bit quicker for you guys. Cool. So price is going lower. Obviously, at this point, if you weren't in this initial trade, this is where we can kind of utilize lower time frames and look for another kind of entry within this new range that has formed. But because we're already in this initial trade, I'm not going to be entering any other positions. So let's just let this one play out. It's looking good so far. If I was looking for another position here, you can see now that price has pushed towards the lows, retraced before sweeping the lows. So this gives you a nice opportunity to look for another short. In the live market, I wouldn't be doing this. I would only be in this initial trade rather than having 2% open risk. But just for the sake of demonstrating some more trade examples for you guys, this is something I would look at, right? Price has retraced back up. We've seen a sweep of this internal liquidity. So this would be my POI. Now that this area has been swept, again, we're jumping over to the M5 chart and we're waiting for the most recent higher low to be broken. In this case, it's this one right here. So let's see if that happens. Yep, there we go. So price did end up breaking that higher low. Just there, that's our change of character. We mark that on. We have this area of imbalanced supply as well, this sort of whole region. So this would be another valid trade opportunity. But as I said, because we are already in this first trade above, in the live market, I wouldn't be entering this. But just to show you guys another trade example, and to get as many trade examples in as possible in this video, I'm just going to show you guys this, because this is a perfectly valid trade, right? We've had a sweep of that internal liquidity. Price has given a change of character to the downside, and we've got this area of imbalanced supply. So let's go ahead and set this order via a limit order. There we go. So there you go. Price has tagged us in. Let's see how this would have gone This is also the powerful thing about using liquidity as well, guys, is you can very frequently know where price is going to react from. So even if we're wrong here about higher time frame direction and price eventually continues to the upside, this is key, right? So even though we could be wrong about overall direction, you very often will know that there's a high probability that price is going to react from these liquidity levels. So based on that, you don't need to be right, because you can still basically get and capitalize on a reaction to the downside from here. Yeah, there you go. So exactly what my point was. Price could completely reverse on us now, but because we have basically used this idea of liquidity, we knew that there was a high probability that price reacted from that level, and that's kind of exactly what happened there. So tip for you guys is focus more so on liquidity rather than supply and demand. That has been a massive game changer for my trading. So you can see now we've had another break of structure to the downside just here. If we just zoom back out real quick as well, one thing I want to do here is mark on these liquidity levels so that I know when they are taken out, because this is where we could potentially see a reversal come into play and when we could see price potentially start to flip back bullish. Because if we look on daily time frame again, just a reminder, price is still very much in this uptrend. So these are the liquidity levels that price could potentially target and take out before we see that reversal over to the upside, if we are going to see price continue bullish, right? So for now, we can still look to capitalize on a move down into the liquidity. So if we go back over to some of the lower time frames, at the moment, I would probably just be letting price develop. I'm not really seeing a clear point of interest here. You can see price isn't really reacting from anything significant here. So I'm just going to play price on a little bit. Okay, so we've now also had another break of structure. One thing that I will do is, like, instead of only using higher time frames, right, sometimes it's essential to zoom in on lower time frames, because if you're looking at, for example, only the 4-hour chart here, you can't really see a clear point of interest, right, unless price comes all the way up to here. So in a scenario like this, it's kind of crucial to use lower time frames to look for some points of interest, because if we're only on higher time frame, we're just going to miss the move and there's not going to be a clear point of interest for us to enter from. So I'm not really seeing anything on lower time frame here either, to be honest, so I'm just going to play price on a little bit. Right, there we go. So price came lower. There wasn't really a trade opportunity there, so that's completely fine. But what we can see now, right, is price has come into this daily liquidity level. So zooming out back on daily time frame, you can see this is a very obvious daily liquidity level, right? Price has just swept this area and it is an overall in a bullish trend, right? So what I'd be looking for here, in this case, I would be waiting for price to start shifting back bullish in line with that overall trend. So what I would particularly be looking for here is for it to at least break this 15-minute structure. When you've had an extended bearish move like this, 5-minute isn't really enough. You want to, instead of trying to catch the very bottom, you want to wait for price to show you that it clearly wants to bottom out and create some more bullish structure, right, and reverse. So there we go. In this case, that is exactly what happens. Notice the momentum here as well. This is ideally what you want to see. You don't want to see price just very correctively moving up. You want to see this impulsive move and momentum coming back in. So here we can see price has created a change of character. After sweeping daily liquidity, we then have this area just here of imbalanced demand. So this becomes a valid trade. I'm going to set my limit on this area. With this one, I want to enter just here and I want to have a bit more of a conservative stop, because price could definitely retest this lower down demand as well. Obviously, we don't know which one is going to hold, so I'm fine to enter here with a slightly wider stop. 1 to 3 mechanical TP, and we will place this order right here. And let's see if price retraces for us. Right, there we go. So we are now tagged into this move. Oh, now we're tagged into this move. The first tap didn't get us in. Very nice reaction so far. There was probably, like, if you guys wanted to wait for another 5-minute confirmation in this area, there wasn't really any need to. But if you are a bit more of a conservative trader, you could have waited for something like this. So price grabbed the low. This is the lower high. Price has now shifted back bullish on the M5. So this would have been the change of character. Then if you wanted to wait for this confirmation, you could have then entered and executed a trade on this area of demand right here. So the trade would have looked something like this. In this case, I would want stops below the low. And as always, just going for a mechanical 1 to 3 TP like this. Obviously, I'm not going to place this one because we're already in this initial trade, but let's see how that would have went. Yeah, there you go. So that trade would have also hit TP. Very nice. Now, if we just mark on, if we get rid of some of these markings, so we can see now price has broken structure again, right? So as opposed to before, where price was printing this very clear bearish structure and price action, we have now very clearly had that shift back over to the upside. So at this point, it's important not to stay married to the original bearish bias that we had, because we understand now that price has taken out those daily lows. So this is a likely point where we could see price reverse from. So now that these daily lows have been taken out, we're essentially just looking for price to kind of continue up in expectation that this could just be the formation of a higher low for price to print higher highs up here, right? So if we go over to hourly chart, we're still in this initial trade. So let's just allow this to play out first. Obviously I wouldn't, yeah, there we go. So TP was hit on that one. One thing I was going to say is if I'm already in this trade and I'm risking 1%, I'm not going to enter another trade because I only want to have 1% open risk at any given time. So following the structure, again, we've had this very clear momentum coming back in. So we've had this new breaker structure right here. So what I'm looking for now is a retracement back down into a POI to maybe capitalize on some more longs. At the moment, I'm not seeing a clear POI. Let's zoom out to the 4 hour. Yeah, so in this case, we have this kind of demand here, this like whole 4 hour demand region. So if price can retrace back down into this, this is my POI. Notice as well, price has swept some liquidity towards it. So let's see if it can come lower into this area. There's not really anything to buy above this area from. Like there's no area of demand here. There's no liquidity level or anything like that. So unless price comes into this POI, there's nothing for me to do here. So I'm just waiting for that. Or for it to break higher, form a new point of interest, and then we can look to go from there. Okay, no, so price has tapped into this area. Let's see, have we had a change of character here? No, so in a case like this, it's quite hard to trade because the change of character is here, but that's already pretty much in alignment with the main structure. So it's going to be very difficult to get a confirmation on this. One thing I would look for is if price can come down and re-grab the low and then presents a change of character, that would also be a valid scenario for me. But no, it looks like price just wants to go straight for the high here. So that's fine. It has reacted from the high. Let's just zoom out again. So yeah, there's not really a POI inside this range. So what I would look for now is for price to sweep the first tap of this demand. I mentioned before, gold likes to do this a lot, where it likes to come back for that first touch of the supplier demand, sweep it before then heading higher. So let's have a look if price comes back down to this area. Again, there's nothing above this area I would buy from. There's no like clear POI here. So this is just kind of like a waiting game to see if price does come lower or whether it wants to reverse. Right, so price has swept that liquidity now back into this 4 hour demand zone. 5 minute chart, let's have a look. For a change of character in this case, I would want to see price break this structure and close above it. Yep, there we go. So we've seen a closure above this area. Now in terms of entries on this one, we have kind of two demand zones we can consider. We have this one, right? And then we also have this lower one just below. But in this case, because there is no liquidity above this first one, I'm going to enter on the lower one, because one thing I need to see in order to enter the trade is for some liquidity to be taken out into the POI. So in this case, this would be the trade. If we just set this order, limit order, place. So yeah, in this case, I'm seeing this first area as like an inducement above the area, above this lower demand zone. If price were to create some liquidity above this first one up here, I would then execute on that one. But because there's no liquidity above it at the moment, I would be waiting more so for this lower zone. So So let's see if price wants to retrace for us. Just here, we go over to 15-minute chart. Trade is still valid at the moment, so I'm going to leave the limit order. Right, there we go. We are now tagged in. Quite an impulsive move down. Ideally, that's not what you want to see, but the trade is still valid, so let's just allow it to play out. Yeah, there we go. Nice TP hit on that one. For some reason, the limit order did not get tagged in, but we'll just ignore that because price very clearly did wick into this zone. So we've seen price mitigate this demand now, and we've seen it push up towards the highs. So what I'm thinking here is now that we've seen this, we can likely just see price continue up towards the external high up here. So that's kind of what I'm going to be looking for going forward, to see if we can see a retracement to capitalize on some more buying opportunities, right? We've also seen price now break structure again just here. So maybe this POI, you can see how like corrective this pullback is at the moment. We have this area right here. So maybe if price wants to present an entry from here, so going over to the M5, let's monitor this region. Yeah, so we've had a sweep of the lows. Price has presented a change of character just here, right? And in terms of entries on this one, we have this demand down here. So this is the entry. Let's place this order just here. Stops, I'm going to place it. In this one, I want to have it a bit more conservatively, just below this lower demand in case price wants to come back down and retest it. Actually, I'm going to make it a bit smaller just so I don't have to go for a huge target. And then as always, we'll go for a 1 to 3. We will place this limit. Nice. Cool, we're tagged into that. Okay, nope, so little loss on that one. That's fine. I would have said that that trade was a bit lower probability anyway because it was kind of in a premium of the range. So that's fine. You can see price did end up coming down, wicking into this area of demand instead. Yeah, and swept the high once again. It looks like price wants to come lower though. Maybe for the next point of interest I would look for would be another regrab of this low. That's kind of the next liquidity target for price. So let's see if that happens. I wouldn't buy above this area. There's nothing here to buy from, right? You just have this very efficient looking price action. So let's see if price can make its way down. Right, there we go. So price has taken out that liquidity. One thing to monitor here as well, and one thing I like to use as a point of interest, and one thing that, if anything, makes a trade higher probability is, and this is key, well, this is one of the things that has massively helped me, is if you see the supply demand zone itself swept rather than it holding, like you have seen here, I've noticed that price is very often going to react from this area. So we've seen this 4-hour demand swept. Price is overall still bullish. So let's jump over to the lower time frames to see an entry. Yeah, so here you can see we had lower high, lower low. Price then creates a higher high just here. This is our change of character. In this case, the risk reward is going to be worth just doing market execution. So I'm going to have my order like this, stops just below the low. And this is also another tip for you guys, right? I see a lot of people, they try to get these so-called sniper entries, and for example, they would be waiting for a pullback into this demand zone. But is there really worth potentially missing the whole trade just for a retracement of a few pips to kind of make the risk reward a little bit bigger and to kind of give yourself an ego boost of getting a sniper entry? There's not really any point in doing that, right? So I would rather just execute here, market execution, like so, rather than waiting for that small little retracement. There's literally 0 point, right? So let's have a look how this goes. In this case, it seems, yeah, price would have retraced into your area, but as always, it's not going to always do that. So it's better to just kind of have that more kind of general entry rather than trying to go for sniper entries all the time. So let's see price making its way up. And yeah, there we go. Nice TP hit. And as I said, monitor the areas of supply and demand once they are swept. A lot of the times when you see a move like this, it's not price invalidating the area of demand, it's price sweeping the area of demand for then higher prices, and if anything, this makes the trade higher probability, right? So now that we've had this move over to the upside, we can see price very clearly starting to shift bullish again. We're looking for another retracement into a POI for more continuations higher. So in this case, what do we have? So yeah, in terms of like the 15-minute, we've had price break structure just here, come into this area of demand. We've seen a change of character right here. So this would have been the entry confirmation. And then in terms of an entry, I would be entering on this imbalance just below the last bit of liquidity right here. So in this case, the last bit of liquidity is this low right here. That's the last bit of liquidity before the imbalance. So this is the entry. Mechanical 1 to 3 TP. Place the order and see if this pulls back for us. Nice, we're in. Let's have a look if this can continue up. Not liking how it's reacting from that high. Yeah, stop loss on that one. That's annoying. It went 2% in our favor, then pulled back on us. Slightly annoying, but it was a valid trade, so nothing really to complain about there. Oh yeah, that's annoying. So like I said before, gold likes to do this a lot, where it sweeps that initial tap and then makes the move, as it has done in this case. Next kind of idea would be, I want to see these equal lows go. You can see how we've got now these kind of equal lows. There is an area of demand just below it as well. So this is the next POI for me. Or a sweep of that liquidity. Yeah, so price is just broken higher here. So we can mark that on now. We get rid of some of these markings as well. So again, guys, just really rinsing and repeating the same thing. Trading should be this mechanical. We're looking for the structure. We're waiting for a pullback into a POI. We're then waiting for a confirmation and targeting a 1 to 3. And that's really all we're doing here. There's nothing complicated about this at all. We're just simply following structure. So now that we've had this break of structure, right, I'm looking to kind of follow this up towards the previous high, which is this daily time frame high. And I believe at the time this was the all-time high as well. So again, looking for a retracement lower. Let's have a look if we can see a new point of interest. There's not really a lot going on here unless price can retrace back down a bit further. So let's just keep playing this. Right, so price is now retracing. Still not really seeing the clear point of interest here. Sometimes gold does this where it's just like parabolic and it doesn't really like to pull back that much. And it's very difficult to trade a scenario like that. Like this, for example, there's no kind of entries here. Price is just rallying. And it has also just broken that all-time high as well. So if we mark that on, this now becomes internal structure, so it's not really relevant for us anymore. We can get rid of all of these markings. So yeah, if we zoom out to daily as well, you can see now price very clearly making its way back over to the upside. What I would look for here at the moment, I'm only seeing this POI really. So if price can retrace into this area, that would be quite nice. Apart from that, there's not really a lot going on here. Price is just rallying. Go over to maybe if we can see a sweep of this low. This is kind of like the most recent higher low. So price very often sweeps these areas and reacts to them. So liquidity has been swept. Let's have a look. Yep, we've got our confirmation. This was the change of character. So what I would look for here is very simply a retracement into the imbalance just here. Setting a buy limit on this area. Stops a little bit below, and as always, mechanical 1 to 3. Might make the stop a little bit smaller on this one. we have been tagged in. Let's have a look. It's not looking the best at the moment. Yeah, nice. So like I said, the trade wasn't looking good, but as always, what we're doing is holding to stop loss to take profit. And that's why I said in the introduction, it's important to, no matter how you feel about the trade, just follow that mechanical process, right? If I had exited this trade because I didn't think that it looked good, that would have been purely a subjective metric, and there's no way of kind of repeating that. So that's why I kind of, in trading, I really advocate this kind of mechanical approach and making trading as mechanical as possible, having that mechanical 1 to 3 risk to reward, and holding to stop loss or take profit. Now guys, if you did miss any of the previous parts to this gold backtesting series, I would recommend watching this video next, where we go through around 40 minutes more worth of backtesting. I hope you all enjoyed this video, guys. If you did, make sure to like and subscribe, and I will see you in the next one.